Welcome to DeFi by Design, where we talk all things blockchain and cryptocurrency while striving to educate, empower, and enrich.
It's your boy Andy, and welcome back to the DeFi Slate YouTube channel. Smash the like button on this video, that really helps us out, and sit back and enjoy the content. Thank you very much.
What's going on, guys? Welcome back to the DeFi by Design podcast, here for episode 86. And we are talking with our buddy Greg from Shardeum, a new layer 1 blockchain coming to the market shortly. Excited today, in the midst of the market madness, to kind of dive deep into a future vision for applications built on blockchains and kind of in the Web3 world. Starting to see more and more convincingly that there's going to be a variety of different blockchains hosting all different sorts of applications that will have different use cases across all different, kind of spheres, whether it be enterprise chains, kind of DeFi, NFT friendly chains, more, there's just going to be a lot of applications and different types of blockchains for different countries or different people, and there's going to be some large like Ethereum and kind of some of the other ones like we've seen Solana and such kind of take the stride. But here we are in the midst of, like I said, the market madness, and I hope everyone's staying sane. Rob, I hope you're keeping your head on straight as well. And it's good to be back on with you. So how you doing, Rob?
Good, man. Good. Yeah. Lots of chop amongst the markets, but it's good to, hop on a podcast, continue building, really continue learning all the way through, and not really mentally capitulate ever, because then you would miss out on all the fun. So there's tons going on. I'm stoked to talk to Greg about really everything that's going on Shardeum. There's some interesting kind of developments recently, like Andy said, about kind of like these applications. There's going to be so many of them. That's where a lot of the user activity is going to end up. And I'm stoked to kind of hear, Greg, your thesis on fat protocols or fat applications, and kind of which way the trend is going to go. And then generally all the applications that you expect to see on Shardeum, which ones you're really excited about. So without further ado, I'll pass it over to Greg, and we can get started talking about Shardeum. How's it going, man?
Hey, Andy. Hey, Rob. Thanks so much for having me here. I'm the head of fundraising and ecosystem at Shardeum, and really excited to talk with you guys more about our vision for the future of Web3 and what Shardeum is and why we're building it. How do you guys want to get started?
Yeah, sounds good. Well, first and foremost, how was the conference, Token 2049? How was Singapore?
Oh yeah, Token 2049 and mainnet over the past 2 weeks were awesome. Speaking of the market, when you go online, I think a lot of the talk in Web3 today is still just about, the market and the performance of different crypto assets. But it's so exciting to go to these conferences, because that's where you meet the builders who, all share a common vision for the, the future of Web3 and decentralization, and understand how massive decentralization is for society. And so, everyone's excited to reconnect at these events and talk about the latest in the development of their software and technology and the new cool, exciting things they're working on. So it was a ton of fun meeting all the builders in person and learning about what's upcoming in their ecosystems and projects and what's next.
Yeah, it's funny when you go to the conferences, nobody wants to talk about what the price is. Well, I guess unless the price is super high, then everyone's just giddy. I remember ETH Lisbon, it was no, don't talk about the price. This was November of last year, so literally the top. And everyone was, there's still little talk about the prices, but everyone's just giddy on their high horses. And then things are different as the bear market kind of progresses, as we enter into the no talking about price, because it's sad. But that aside, I do agree. Those are so fun, man. Just being able to chat with a lot of different people. And yeah, it sounds like you had a successful time with Shardeum as well, completing your raise. That's always good news. Yeah,
absolutely. It's a great place for, to meet some of our existing investors and new investors. And as I was mentioning earlier, my 2 weeks traveling there, we closed the remaining 1.5 million in our round. So it's definitely really exciting to not only be able to attend these events and just meet such talented, intelligent people, but also be able to, make a lot of progress on Shardeum and our fundraise as well.
Yeah, for sure.
What's that process like? Kind of talking about like Shardeum, kind of like before it exists. You're kind of talking to people that are starting to align on like a similar vision that they want to see Shardeum exist. So you go out and you start raising capital to fund the development of this layer one blockchain. Like what were some of the conversations, like what turned investor heads, and ultimately got people excited about the same thing you're excited about?
Yeah, great question, Rob. I think this is a really good question for people that want to get into Web3 and want to learn about how do they turn an idea they have into a product that they can raise funding for. And so different VCs have different theses, and they look for projects that fit their thesis and try to find really strong founders building good technology within that thesis. And I think a lot of money is pouring into infrastructure in Web3 today because there's a lot of awareness around the scalability challenges that Web3 has, and investors are just trying to make really strong bets on good scaling technology. And so at Shardeum, we believe there's a lot of improvement that can happen at layer one before we go and scale at layer two. Like ZK rollup is good technology, but the foundations that rollups are scaling on top of have a lot of opportunity to improve. And so we think that sharding hasn't been done to its full potential yet in Web3. One of the biggest concerns with sharding today is the fact that it breaks atomic composability. So if you have a transaction that calls two contracts where one contract is on shard A and one contract is on shard B, the composability of those contracts in one transaction can't happen atomically in the current sharded blockchains. And so you're limited to what you can achieve with composability on the existing sharding chains today. And Shardeum solves this challenge. So now you have a sharded layer one where you have the benefit of linear scaling. We can increase our TPS capacity with each node added to the network, while also retaining atomic composability. So the same experience as Ethereum or Solana or any monolithic layer one, but you add linear scaling into the mix where now you don't have this fixed TPS capacity, you can always increase it. And so this is the pitch we've been giving into investors. And, we've been building this technology over the past 5 years. So that's one thing that really differentiates us is so many projects have gotten started in this space in 2018, 2017, just as like an ERC20 token in a white paper, or even some of the new blockchains popping up, launched like an MVP in a white paper of the vision they plan to develop in the future. And they focus on raising funding first and acquiring users and building out their future features second. With Shardeum, we've been building the protocol layer for our project Shardis since 2017. So when we launch our mainnet in Q1 of 2023, it's feature complete. There is no like roadmap of features that we need to build. We've already built them. So that's definitely one thing investors are really excited about. The second thing investors are just extremely stoked about is the fact our co-founder Nishal Shetty is the CEO of the largest centralized exchange in India called WisierX, which last year did $45 billion in volume, over 100 million of it was profit. He has about 500,000 followers on Twitter, primarily, from people in the Web3 ecosystem in India. And so, I think when you take up something to market, you need good tech and you need distribution so you can get awareness of this technology. And, we have that 5 years of product development, proving out our tech. And we have, Nishal and his presence in audience in India to distribute this and build an ecosystem.
Sweet. So to your point about composability, so let's kind of touch on like for our audience, like when you say sharding, how would like for Ethereum, I guess, how would that kind of make sense? And then I suppose what does the composability look like when it comes to sharding, and kind of what does that process look like for Shardeum?
Yeah, great question. So let's start with sharding. So many people hear about sharding in Web3 today, but many of these people aren't engineers, so they don't know that there are different types of sharding. Most people think that just sharding is sharding. But really the goal of sharding is to parallelize a function. Sharding performs functions in parallel. And in blockchains, you have different types of functions that you can parallelize. So like there's data sharding. Ethereum 2.0 plans to implement data sharding, where they'll have 64 different shards that store different sets of data so that layer 2s can read and write faster from layer 1. Ethereum wants to optimize data availability for layer 2. So they're not going to parallelize the processing of transactions. They're just going to store data in parallel. You also have projects like 𝗲𝗂𝗃𝗃, which did compute sharding. So they parallelized, the computation or validation of transactions, which they gave them some increase in TPS. But, a blockchain has 3 functions or scalability bottlenecks that it performs. First, you have to validate a transaction, and that happens at the CPU. But a CPU only has so much capacity to validate a given number of transactions per second. Once the transaction is validated, it needs to be gossiped to every other node in the network. But there's only so much bandwidth available in a network to gossip a given number of transactions per second. So you run into the bandwidth bottleneck. And then once every node sees every transaction, they need to write to the disk to update the state of addresses involved in the transaction. And you can only write to a disk so many times per second. So you have the disk I/O, the network I/O, and the CPU capacity that limit blockchain's scalability. Now, the way to mitigate these bottlenecks is to use something called state sharding, which parallelizes all 3 of those functions. And the way it parallelizes it is, rather than having every node in the network, for example, in a blockchain like Ethereum or Bitcoin, every node processes every transaction and stores all of the data in the history of the blockchain. And so when you add more nodes, you don't get parallel processing, you just get more decentralization and redundancy. But eventually you have enough, there's a point where you have too much redundancy and decentralization, and then you can never have enough decentralization, but there's a point when you have too much redundancy, and what you really need is parallel processing, so you can increase your capacity to process more TPS and scale. And so what sharding does is, rather than every node performing these processes for every address and every transaction, now you have different groups of nodes that are performing these functions in parallel. So for example, you could have, shard A processing transactions for addresses 0 to 100, and then shard B processing transactions for addresses 101 to 200. And this isn't actually how addresses are named, but just wanted to make it simple for the audience.
Gotcha. So, okay. So kind of to put so there's multiple bottlenecks that affect the basically efficiency and speeds that blockchains can compute certain data calculations, kind of executions, right? And what sharding allows you to do is effectively, basically, like you said, take these functions and kind of allow them to happen in various locations, if you will, or various transactions in a parallel manner, so that way that you can scale dramatically more transactions per second without effectively overloading the blockchain, causing like high fees or failed transactions or just overall lack of scale. And so by conducting these in parallel, you effectively have all of these different shards of the chain that all report back into one. And I'm not sure if you touched on kind of like the so that's broad sharding at its core, what it is. Now, yep. With Shardeum,
sorry to cut you off, but just to clarify, Shardeum doesn't need to report back into like one beacon chain per se.
Okay.
So that is one unique thing about Shardeum. But the best way to explain sharding to the users is, here we have Andy, Rob, and I, and Andy, Rob, and I can each have our own wallet in a blockchain. And in an unsharded blockchain, every single node in the network is going to have the data for all of our wallets. And when we submit a transaction, every single node in the network is going to need to process the transactions for all three of our wallets. Now, in a sharded blockchain, maybe shard A has my wallet, shard B has Andy's wallet, and shard C has Rob's wallet. And so if all three of us, submit a transaction at the same time, now these transactions can be processed in parallel rather than being processed sequentially one by one by every single node in the network. And
gotcha.
Yep.
Cool.
So Greg, like the parallelization of these transactions increases the scalability. And to kind of like summarize what you're saying, just like really, really simply, like we have Ethereum, Bitcoin, like these non-sharded blockchains where every miner or every validator is processing every transaction. And that creates a redundancy where each time the transaction goes through, it's rehypothecated to all the other nodes. And then that creates like this enormous amount of redundancies where we could kind of like specialize the nodes for one process in a sharded network. And then some of those nodes are doing the gossiping. Some of those nodes are doing the processing. Some of them are doing the attestation to the state. And as a result of like this, almost like the division of labor, the nodes start to specialize in their certain role, and that allows them to work together more efficiently.
Yeah, that was you're very close, Rob. But we're not segmenting the different functions in parallel. Like we're segmenting the address space. So, you, Andy, and I, each of our wallets have a unique address, and a blockchain needs to perform different functions for each transaction that our addresses submit to the network. And so now we're not segmenting like, some nodes store the data and some nodes process the transactions and some nodes are responsible for like, the networking. We're just segmenting the processing of transactions based on addresses. So every node performs the same functions, but for different addresses. Does that make sense? So,
yeah, that does make sense. So now, like, each of these nodes are doing the same function, and there's like certain nodes that are processing addresses, like the first 1,000 addresses on the network. There's a certain set of nodes that are processing those transactions, and then like the second 1,000 addresses are getting processed by another set of nodes. And it almost seems like, like if we look at the EVM today, it has like certain rollups and certain layer 2 networks that are feeding transactions into the EVM. And those RPCs, like, Arbitrum, Optimism, Avalanche, to name a few, those networks are processing the transactions of the addresses on their networks, and they're feeding it to the overall state of Ethereum, call it the overall state of the EVM. Is that a similar, maybe you could draw is that a fair similarity between the EVM and Shardus? And maybe there's some important differences to highlight between how the EVM functions and how Shardeum operates.
Yep. Yeah. So Shardeum uses the EVM. So we use the same virtual machine. It's just that the architecture, of our network that uses the EVM is a sharded network. And at the protocol layer, we've also designed this architecture that allows us to parallelize the EVM. So you get parallelization from sharding, but now imagine like a node being able to spin up multiple EVMs in one node. Like why can't a node in Ethereum today process multiple addresses transactions at the same time.
Yeah.
You should be able to like parallelize the processing of transactions within a node, but you can't because like Ethereum views the world as pre-state and post-state, and if you start to try to parallelize transactions on Ethereum, you'll have chains where one chain gets longer than another chain, and then they lose synchronization of the current state. And so that's why like you see, content come out from new projects like Aptos, which say that, you can't parallelize the EVM at runtime, but Shardeum does consensus on each transaction individually, which is really unique. And that allows us to, parallelize the EVM within each node, but then also use sharding to get even greater parallelization. But we're getting, I don't want to get too technical here. Just to again explain the architecture of Shardeum in simple terms. In Ethereum and Bitcoin, every node processes the transactions for every address. In Shardeum, no one single node is assigned to the same range of addresses. Every single node covers a unique range of addresses while ensuring that each address has the required redundancy of 128 nodes. So if any one node ever goes down or goes offline, there's 127 other nodes that is processing the transactions for an address and storing that data. And so now what this allows is, because each node covers a unique range of address space, you get an immediate increase in TPS capacity with each new node added to the network. And so the feature or the value proposition here is TPS per node. Now we're not like, Ethereum, which does like 15 TPS, or, no matter which blockchain you have today, if they're not using sharding, they have a fixed TPS capacity where they say, this is how much TPS we can process. And once you get more demand than TPS, then you have this queue of transactions that build up, which is when users need to begin bidding gas fees to prioritize their transaction first. The idea with Shardeum is that we can always increase our TPS capacity by adding more nodes to be higher than demand. So there should never be a queue of transactions that build up, which users have to bid gas fees on.
Yeah, and there'll always be increased decentralization with the increasing amount of transactions per second, which is kind of opposite to what we've seen right now. Like Binance Smart Chain, for example, they are very fast, but they just had a hack and they just rolled their chain back. With the blockchain trilemma, what you usually think of is decreased decentralization leads to increased speeds, because centralized databases, for example, something like a Visa can process faster than something like an Ethereum. However, with Shardeum, what we're getting at right now is that we can also increase decentralization while increasing the speed. But what we haven't touched on so much is the third kind of important model of the blockchain trilemma, which is security. But my initial thought is that because you guys are part of EVM, you guys are basically inheriting the Ethereum security model as kind of your own security model because of being part of the EVM. But talk to me kind of about how you guys are viewing the blockchain trilemma, if you will. And we've covered speed and decentralization, but security.
Yeah, great question, Andy. So when it comes to a sharded blockchain, the biggest risk for security is a 51% takeover attack of one shard. And so, sometimes people think that there's like a greater security risk in a sharded network because now you don't need to take over 51% of the entire Ethereum network. You just need to take over 51% of one shard, which is a smaller amount of nodes. And so in Shardeum's case, each shard size is 128 nodes. So if someone were able to theoretically take over 51% of one shard, then they could take over the network. And so how does Shardeum prevent that? There's so much innovation here that people haven't seen yet in this space, which we're really excited to bring to market. And one thing about Shardeum is that there are three types of nodes in the network, but two types that we're going to talk about here are standby nodes in validator nodes. So in a blockchain, most blockchains pay the validator nodes node rewards to incentivize them to, operate a node in the network. And so in Shardeum, the network doesn't want to pay 100,000 nodes gas rewards or node rewards if it only needs 1,000 nodes to process the current demand. And so the network is fully permissionless in the sense that anyone in the world can operate a validator node, but the network controls its size. So you have standby nodes, which are nodes waiting on standby to become validators. And you have validator nodes, which are actively in the network validating transactions. And the network controls the amount of validator nodes in the network based on the demand. So if there's 1,000 TPS, we might have 2,000 nodes, for example. But now, 3 hours later from now, some application goes viral, and now there's demand for 10,000 TPS. Now we may have 30,000 validator nodes in the network. And so you have these nodes waiting on standby, and you have validator nodes. And every 60 seconds, the standby nodes are sending a join request to the network to become validators. And so every 60 seconds, the network is swapping out standby nodes with the existing validator nodes. And so when it comes to security, the way we prevent a shard takeover attack is because every 60 seconds, a percentage of the nodes in the network are getting swapped out with the standby nodes. And so you can't choose when your node is added to the network or which shard your node is added to. And you don't know how long your node is going to be in the network for. You could be added, 2 minutes from now to a shard. You don't know which shard your node's going to land in. And then 3 minutes later, it could go back to standby. And so just like Bitcoin or Ethereum, you have to have 51% of all in Shardeum, you have to have 51%, not only of the network nodes, but you also have 51% of standby nodes to be able to get a majority of nodes into the network in the same shard at the same time. So this node rotation it is what makes the probability of a shard takeover attack just like a very far less than 1%.
And so that is the overall downfall to sharding, is the potential for a takeover attack, similar to like Bitcoin mining takeovers. If all the hash power was...
That's one pitfall of sharding, is concern about this shard takeover attack, where now you don't have a network of hundreds or thousands of nodes that you have to take over. You only have to take over a shard, which is usually somewhere between 100 to 300 nodes. But these projects have really talented engineers, and raising millions of dollars, and they're not going to launch something that doesn't have an efficient security mechanism in place to prevent this. Of course, we've seen so many hacks are possible in this space. There's definitely a lot of hackers out in the world trying to find ways to get around these mechanisms. But at Shardeum, we're extremely confident that there is no security risk for a shard takeover attack, and we're working with really talented security auditing firms, and we'll also be launching a bug bounty on platforms like 𝗵𝗶𝗴𝗵, where you start to get this game theory in place where if I'm a hacker, when I discover a bug today, should I wait until the mainnet goes live and exploit this bug and potentially earn millions of dollars? But if I wait and I don't report the bug today and earn the bug bounty, and I want to exploit it, what if someone else discovers this bug as well before I exploit it, and then because of that, this other person gets the bug bounty and I don't get it? Should I be a hacker and try to exploit this bug, or should I report it today and earn a smaller reward? That's why bug bounty platforms are so great. So there's a lot we're investing to improve the security. And I think the other big pitfall of sharded blockchains, again, is just this idea of breaking composability, where now each shard is like its own blockchain. And so how do these shards communicate? It damages the user and developer experience when applications are segmented across shards and they don't have composability with each other. the reason Shardeum is able to retain atomic composability is because we do consensus on each transaction individually, which for your listeners is going to open up this whole can of worms. Like, why are these guys doing consensus on transactions instead of grouping them into blocks?
Yeah, fair enough.
Yeah, so does that create like a stateless kind of machine where you don't really need to like update the the blockchain anymore? It's because like each transaction comes with its own like blockchain embedded into it?
Yeah, that I think this is getting above like my engineering level of education. You still need to like maintain a state in Shardeum. Shardeum is still like we can call it a blockchain because that's what all of these networks are called, but we do have a concept of blocks, which happens after consensus. We group transactions into blocks after they've been consensus upon. But prior to like when we're validating transactions and coming to consensus, we do consensus on each transaction individually, and we're performing the same functions as a traditional blockchain. We're just not grouping transactions into a block and doing consensus on a block. We do consensus on each transaction individually. And so that's one of, like, when people ask what's the trade-off of Shardeum, the major trade-off is that Shardeum is less performant than it could be if it did consensus. Like right now we're doing consensus on each transaction, which is more compute intensive and consumes more bandwidth. So we could be more performant if we did consensus on blocks instead of each transaction individually. But in a sharded blockchain, like one of the biggest challenges is guaranteeing atomic processing of transactions across shards. What that means is if you have a transaction in a sharded blockchain that does consensus on a block, and that block or that transaction contains 2 or more addresses on different shards, how do you guarantee that the transaction in the block on shard A also gets into the block on shard B? Shard B could have higher gas fees, so the transaction doesn't get into the block, and then shard A's block needs to be rolled back. So the transaction either needs to be accepted in both shards or rejected in both shards. But shard B could have higher gas fees than shard A, so the transaction doesn't get into the block, or some of the transactions in shard B's block could get orphaned, and that block's rolled back, and then shard A's block needs to be rolled back as well. And so to get a little bit into the technical details, the current sharded blockchains, the way they achieve atomic processing is when a transaction is submitted to the network sees the first address involved in the transaction. The transaction will be routed to that address's shard. That shard will process the transaction as much as it can until it sees another address that it doesn't have the data for. Once it finds this address, it'll route the transaction to that address's shard with a receipt of the work done on shard A. And this process will continue until the transaction is fully processed, and then the data will be shared with all the shards. And so you get this like asynchronous processing of transactions, where transactions are hopping across shards asynchronously one at a time. And that's what breaks composability. Like when these shards can't come together and communicate with each other and validate a transaction at once in one consensus, you don't have composability of contracts and applications across shards. And so this limits things like DeFi, where, you know, if you want to launch an AMM and use like or a DEX, and, you know, in an AMM, you have different token pair contracts. In a sharded blockchain, AMMs don't work if you have different token pair contracts on different shards, because those shards can't communicate with each other and come to consensus atomically. But in Shardeum, when we do consensus on each transaction individually, we no longer have to worry about this atomic processing challenge. You know, every transaction is either accepted or rejected. We don't have to worry about it getting into blocks on different shards. And so what this allows us to do is use this novel architecture where only the nodes responsible for the addresses involved in a transaction come together and form a virtual shard or a consensus group and validates the transaction at once. And so now you get the same experience as you have on Ethereum or Bitcoin or Solana, where it's one network where all the applications can interoperate with each other. Users don't need to think about which shard they're currently on. Developers don't need to think about which shard they can deploy their application to. It's one seamless experience, but you have the benefit of linear scaling. And that's so important because like one of the challenges Solana is facing today is they're getting congested. They're reaching like their TPS capacity. And the only way for them to increase their TPS capacity would be to use more powerful validator nodes and scale vertically or scale at layer 2. And so they're reaching their capacity and hitting their bottleneck. And now they need to implement fee markets where users can prioritize their transaction first by paying a higher gas fee, just like the way it works on Ethereum. That's what's so great and important about Shardeum is that we can avoid fee markets and requiring users to bid on transactions by increasing our TPS capacity with each node added to.
And you mentioned like how there's like a virtual shard that's formed by the nodes that are a part of that transaction. And is it almost like there's not really like a certain amount of nodes online at one time, like because these nodes are kind of spread out across the addresses that are part of a single transaction. And since you alluded to like one node that kind of processes the transaction for that address, do these nodes for each transaction come together to process that transaction and then kind of like disband and then like cease to communicate with one another? Is that sort of how like
the only times that nodes which are assigned to different addresses need to communicate with each other is when there's a transaction that involves like both those addresses. So if I'm node A and I'm assigned to address 1 and you're node B and you're assigned to address 2, and some user has a transaction that involves address 1 and address 2, our nodes will come together and form a consensus, a virtual shard, or what we call a consensus group, where they'll validate that transaction. But then they go back to processing other transactions which don't include both of their addresses, and so they can continue processing transactions in parallel. Yep.
Nice. And you mentioned like fee markets. This is just kind of switching gears as we kind of like wind to the top of the hour. Like, how does gas work on Shardeum?
So gas works just like an in real life gas station, where you pay the same cost per gallon or the same price per gallon, but the cost of your transaction can vary based on the amount of gas you consume. So in Shardeum, each byte of data is charged the same price, but the total cost of transactions can vary based on the amount of gas consumed, just like an in real life gas station. And so this opens up a whole other like bowl of benefits. Like now we don't have MEV because transactions are ordered based on time, and you can't front run other transactions by paying a higher gas fee because we charge the same price per byte of data. And you also have like the fair ordering of transactions. If we want Web3 to go mainstream, I personally don't think we should commoditize like transaction processing times. Imagine going to a grocery store, and every time you want to check out of a grocery store, you have to get in this bidding war of who gets to check out of the grocery store first. Like, we already have this challenge with wealth disparity in our country and across the world. And imagine, okay, now I'm not as wealthy as other people, so I have to wait 20 minutes in line every time I go to the grocery store because I can't pay a higher gas fee to check out. I think this is one of the things that like damages Web3's user experience. And that's one thing that's really cool about Shardeum is that transactions are ordered based on time, not how much you can afford to pay for gas.
yeah, we almost have this like social mechanism where like, you know, there is kind of like this social market where like, you know, you cut in front of the old lady, you know, to like check out sooner. Like probably not. You're gonna, you know, let this like the old lady kind of like check out before you because she doesn't really have like that much time left. So you're just kind of like cognizant of the time that she has, the time that you have, and then you know the market kind of just kind of like settles based on the social recognition of each other's time. And then kind of like another EIP that's.
Sorry, yeah, I just also wanted to make sure we leave the listeners with another few points that are just on the top of my mind. One thing is that like there's so much more to learn about sharding than what we discussed here today, but sharding is going to be needed in all blockchains to be able to scale. Like you can only scale so far vertically before you run into scalability bottlenecks. Like in Polygon, if you search Polygon in January of 2022, its gas fees rose to 50 cents when one game became popular on its POS network. If you look at Arbitrum, its gas fees rose higher than Ethereum's in June, you know, when Arbitrum launched, and there's just a lot of transactions being submitted, and its gas fees rose higher than Ethereum's. As I mentioned with Solana, like they now have to implement fee markets because they're becoming congested, and so you know all of this new technology being invented is amazing, and you know Arbitrum, Polygon, Solana have all contributed their own unique proprietary technology to the space and are great projects, but you do need sharding no matter which layer you're at to scale at some point, because you need to be able to parallelize the processing of transactions and be able to increase your throughput capacity. You can only hit the network so hard until you run into those bandwidth and compute capacity and disk IO bottlenecks that we were talking about earlier in the call.
There's the EIP 4844 that's been circulating on the Ethereum side of things. Like, you know, with Ethereum's kind of like generally, like what are your thoughts on like the proto-dank sharding implementation? Like, and I guess where does it stack up against like the other sharded blockchains that are out there now, and you know, how does Shardeum like implement similar technology, or like what's the reasoning not to go with the same method of sharding that Ethereum plans to implement?
Yeah, great question. So, I mean, if you ask someone from the Ethereum Foundation, they'll definitely be able to explain proto-dank sharding better than I can. I don't participate in their team meetings, and I'm not an expert on this topic, but we do have someone on our team named 𝗵𝗶𝗶𝗵, who previously worked at Prismatic Labs, which is the developer of Ethereum 2.0's Prism client. And so, you know, my understanding of Ethereum's vision for sharding is that, you know, they've given up on this idea of scaling and execution happening at layer one. You know, Ethereum is pushing execution to layer two, where the execution of transactions happens on off-chain at a layer two, and layer one is the settlement and data availability layer. And so, if I understand correctly, what like the EIP you're mentioning here is to be able to have 64 shards which store different sets of data. And so now, rather than having one network that like layer twos can read and write from, now they'll have 64 different shards where each shard is like its own chain of data that layer twos can read and write from. So their whole focus with sharding is to optimize data availability for layer twos. They're basically just optimizing the performance of layer ones to support layer twos. They won't increase the TPS capacity at layer one. Like, you'll still be limited to 15 TPS if you submit a transaction on Ethereum, even in a sharded environment. But now layer twos will have better performance. However, one challenge is if they do implement data sharding, there's a CoinDesk article and a few different articles that have come out about if Ethereum does implement data sharding, they're going to break composability at layer 1, which means that what we talked about earlier, different contracts on different shards won't be able to have composability with each other. And so they're taking a very large bet that layer 2s are the future, and damaging the user experience at layer 1 to optimize for layer 2. So in short, Ethereum plans to shard the data, but they don't plan to shard or parallelize the execution of transactions. So you won't see TPS increase at layer 1. You'll see better performance at layer 2. What Shardeum plans to do at layer 1, or what we are doing, is called state sharding, which means we don't just shard the data, we also shard the network and the execution of transactions. So now we can get this TPS increase with each node added to the network. And so now we get more scalability at layer 1. And the great thing is we can also support layer 2s as well. And so layer 2s will have even greater performance on Shardeum. This is our whole focus and thought, is that layer 1s need better performance. And the reason 𝗵𝗂 Shetty wanted to found Shardeum is because he's the CEO of the largest exchange in India. And in his seat, he gets to see, he gets a high level view of the market and all of the data from the users. And what he's noticed is that users in India are buying crypto on centralized exchanges, but they're not using decentralized applications. That crypto is not, a small percentage of people are using decentralized applications, and everyone else is here to just buy Bitcoin and Ethereum and hold it on a centralized exchange. But eventually people are probably going to become interested in decentralized applications. And we think most users in Web3 are going to come from emerging markets. But in an emerging market like India, where people are extremely price sensitive, how do you get someone to use a blockchain if the gas fees are higher than 50 cents? People in India most people aren't going to pay more than 50 cents per transaction because emerging markets are price sensitive. And so we need a layer 1 where people can experience decentralization that can retain stable, low fees, no matter how many users or transactions there are. Layer 1 shouldn't be for the wealthy people that can afford to pay high gas fees to have more security and decentralization, and layer 2s are for everyone else that can't afford security and decentralization. So that we think there needs to be a lot more innovation at layer 1, and that's our focus.
Yeah, it's a really novel solution to the scalability trilemma, which it seems like Ethereum is also trying to solve, but has the trade-off of losing composability across these shards. Shardeum has already, you and 𝗵𝗂 have thought clearly ahead of these other problems, where sharding starts to lose composability, and embedding the consensus for each transaction into those transactions kind of allows you to keep that composability across shards, in addition to improving the scalability with each node that's added to the network. And I think it's a really elegant thesis to build this expansive protocol layer that also grows with the amount of demand. And like you say, we aren't really seeing it yet. There's just not that killer application on blockchains just yet. Maybe it's a social one, maybe it's a gaming one, maybe it's a financial one. We probably see it eventually, and it'll be really cool to see those applications exist.
You just opened up a whole nother conversation that we could spend another 4 hours on, is the future applications of Web3. I love to think about this all the time. I'll just say that I like to think about what would it take to get my mother or my grandmother to use Web3. I think I mentioned this earlier in the call, and it's not digital art as NFTs. It's not DeFi. I'm not going to get my mother to use a DeFi application or buy digital art as an NFT, but she would use a real world use case of Web3 that added more convenience or lower cost to her daily life. I posted a tweet the other day, and it was about the story of DoorDash. The founders of DoorDash started DoorDash because they surveyed 200 small businesses in the Bay Area, and they found that all of these small businesses shared a common problem, which were deliveries are a pain in the ass. And so they built technology to make deliveries easier for businesses. So they found a common problem that users had, and they built technology to solve it. I think in Web3 today, everyone is so focused on these like futuristic use cases that don't exist yet, like the metaverse. Like, not everyone in society today needs or cares about these use cases. What I really want to see founders start doing is the same thing DoorDash did. Go out and survey people in the United States and different countries around the world. Find common challenges that a lot of people have and use decentralization to build a solution that more efficiently solves this challenge than a centralized application can. You know, that's what we need to get Web3 to go mainstream is real world use cases and applications of Web3. But I think the big reason those don't exist today is because we're limited in what we can do on the current blockchains due to the scalability bottlenecks. You know, you can't have an application that goes mainstream and has billions of users and like hundreds of thousands of TPS. Like, just think, for example, the fact that WhatsApp does 1.1 million messages per second. You know, if you combine Bitcoin, Ethereum, Polygon, and BNB chain on their busiest day, haven't surpassed 350 TPS in usage. So we're at 350 TPS versus 1.1 million messages per second. We have so far to go.
Let's scale it up, brother. Yes, sir.
Let's go.
Let's ride.
Yeah, Greg. I mean, this was a lot of fun talking about the infrastructure level, and definitely come back and let's talk about the application level, man.
For sure. Let's meet again in 6 to 12 months when we see some innovative new use cases building on Shardeum. We'll bring those teams on the call here and, you know, talk about real world use cases that are being built in Web3. I'm excited for the day when we watch, football on the weekend or whatever sport you like or whatever TV show you like. And in between the show, you see a commercial of a decentralized application, but it mentions nothing about blockchain, nothing about decentralization, no like Web3 buzzwords. It's just focused on the features of the applications, and behind the scenes, it's decentralized. Our co-founder Omar likes to say that like in the 90s, everyone was talking about the internet and like how the internet works and, you know, like just the technology of the internet. But today, no one's really talking about how the internet works anymore. We talk about new applications built on the internet, but we don't talk about like the speed of like, you know, like the internet and the different challenges it has, because all these challenges have been solved. It works. Today, Web3 and blockchains are so new. They have a lot of challenges. So we're all talking about these challenges and getting all caught up in the tech, but soon we're going to fix these challenges and no one will be talking about blockchain anymore. We'll just all be focused on the cool new applications popping up.
It's exciting stuff, man. Yeah, thanks for coming on, Greg. Excited to see Shardeum grow and pushing forward. So yeah, cheers, man. It was a pleasure.